It had all the ingredients of a racy cricket match, something which we usually see during IPL seasons. And a lot was at stake. Global tech majors, Amazon, Alphabet, and Apple Inc. were among the giants vying for the media rights to broadcast IPL matches for the next 5 years. But on Friday, the three US giants dropped out of the race, leaving seven competitors in the fray. And of them, Viacom 18, Disney Star, Sony, and Zee were involved in the bidding war for the Indian Premier League's 2023-27 cycle. IPL's 2023-27 cycle will have two separate broadcasters for digital and television. In Monday morning's session, the IPL TV and digital rights auction had closed at a total value of 43,255 crore rupees, which translated to 105.5 crore rupees per match. That value subsequently increased to 44,075 crore rupees. Meanwhile, the revised per match value stood at 107.5 crore rupees. A Business Standard report, while citing sources, said that there was an incremental bid of 50 lakh rupees placed in the television category, thus taking the per match value for TV to 57.5 crore rupees from 57 crore rupees, which was the figure at the close of bidding on Sunday. The total value of IPL TV rights now stands at 23,575 crore rupees for 410 matches. Meanwhile, the digital rights have also increased to 50 crore rupees per match, or 20,500 crore rupees overall, from 48 crore rupees per match or 19,680 crore rupees earlier. And the winners were Viacom 18 and Disney Star. While Viacom 18 bagged the digital rights for IPL, Disney Star got the television rights. These numbers have propelled IPL to the spot of the number 2 sports league in the world. The per match value of the IPL has touched 107.5 crore rupees. This is second only to America's National Football League, which costs a broadcaster 132.26 crore rupees per match. The English Premier League costs 85.58 crore rupees per match. Let's put the growth in valuation in perspective. Disney Star had bagged the combined digital and TV rights for the IPL in 2017 for 16,347.50 crore rupees. Back then, the per match value stood at 54.5 crore rupees. These numbers will also come as a big relief for the IPL and BCCI. In recent weeks, a sharp fall in IPL's TV viewership had led some to question the base price set for the media rights. Sony Pictures Networks India's MD and CEO NP Singh had told a Financial Daily that the reserve price needed a reality check amid this decline in viewership. Compared to last year's figures, IPL's viewership fell by 30 to 35% in the first 4 weeks of the 2022 season. In fact, with viewership falling consistently, reports said that some advertisers had even asked Disney Star to make good their losses by offering them spots on alternate high-impact properties. So, what explains the premium that IPL still commands? Also, what will be the impact of TV and digital rights going to different players?
So digital premiums are about 70% versus the base price, which is obviously in line with the expectations because obviously digital is something which is growing at a very fast pace. The digital media industry is growing at 30% plus in terms of growth rates. As far as TV is concerned, the premiums there are close to 25-30% higher versus the base price. Now, this is despite this decline in terms of IPL viewership by BARC, which is there, because I clearly believe that these are not trends which are sustainable. I think this is just more of potential unlock wherein people would have moved outdoors and may not have consumed that much amount of TV, in the last couple of months in the last season. So I think the unbundling aspect of it will have a negative impact because a lot of the large deals, which are the deals throughout the matches, for all the matches, are on a bundle basis. You have some spot deals for the playoffs and for the finals and for the key matches, in the tournament, wherein you have a lot of spot basis deals as well. But close to 70% of the deals are basically bulk deals, which are throughout the match. So it is going to be a challenge to actually beat the numbers that Star would do for any of the new player who comes in. But if they are able to crack the code, I mean, they can even do better as compared to what a Star is doing. So
Another question revolves around the winners recouping their investments.
whoever's bought the TV rights, I think there is not too much to do basically, because TV is more of a mature medium and it's growing at about 6 to 8% kind of a CAGR basically as we speak from here on. And in terms of the revenue as well, what TV generates today, I think Star is generating somewhere close to 3,500-4,000 crores in terms of the TV rights. And if the numbers are to be true of this 24,000 crores in terms of media rights as per the reports, we are talking of a content cost of 5,000 crores. So I think largely, it is only 1,000 crore loss which is there, which will probably go away in the next 2 years, and we are expecting that by third year onwards, you will see a break even as far as TV medium is concerned. But because the growth rates are very tapered on TV, 6 to 8%, there is not much of innovation that one can offer. And because of tapered growth rates, even the profitability aspect, the TV media, whoever has bought the rights, I think the gross profit margin on that will not be more than 10 to 12% in a best case situation in the last year itself. So I think that is how the TV media will be there in terms of the profitability or the return aspect of it. As far as digital is concerned, there's a lot of opportunity there. I mean, the digital media segment alone is growing at 30% in India. And given IPL, the kind of property it is, it can probably grow at 40% plus. And both segments within digital, whether you call it AVOD, SVOD, both are growing at a good pace of 30-35%. But I think a lot of work has to be done there in terms of innovation, interactivity, in terms of what we are expecting because of Web 3.0, in terms of dubbing, in terms of user experience of a platform, because digital is all about customer retention. If you compare this to a TV basically you already have a customer base which you're serving, so there's not much more you can offer. But I think digital is a rat race. It's a very tough fight. There are too many platforms, too many things happening on tech and user experience front. So a lot of work has to be done on digital if you were to achieve that 40% kind of growth rate. And if one were to do that, we are estimating that the break even again for digital as well will happen in third year. But I think in terms of the gross profit margin for the digital media segment, I think there's a potential of 35-40% in the fifth year. So digital that way offers a delta, better profitability scenario as compared to TV. But that depends in terms of the strategy and the execution which has to be done.
The BCCI and IPL franchisees are the biggest gainers from the auction. The money involved in the auction has also made a few things clear. IPL is still a hot property for both media houses and advertisers. It is still a one-of-a-kind asset that helps broadcasters gain an additional user base and gives advertisers sway over hundreds of millions of viewers. But there is one concern that needs to be addressed. In May, it was reported that the CBI had started a countrywide probe into the alleged fixing of IPL matches. There is even a Pakistan angle to it. Were the IPL's credibility to be damaged, it would be a huge step back after Indian cricket's giant leap on Monday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4,000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4,000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.